Hello, investors. Welcome to the channel where I use technical analysis to find possible swing trades. Before we begin, I'd like to make it clear I'm not a financial advisor. Everything I say here is for informational, educational, and entertainment purposes. The technical indicators I use on this channel are not accurate 100% of the time because company fundamentals and macroeconomic factors can drive share price changes differently than what we'd expect based on technical indicators. My goal here is to bring these companies to your attention so you can decide for yourself whether or not they're good investments for you. So if you plan on investing, please do your own due diligence for purchasing shares in any company or consult with a financial advisor. That said, today we're taking a look at another short opportunity with Ares Management Corp, ticker symbol ARES. This is a mid-cap company with a market cap of $28 billion. This company is in the financial sector, operating in 5 segments, including a BDC and in real estate. And as we switch over here to the charts, you'll see this is a pretty good technical setup. I won't say it's perfect, but it is good. But there are other factors to consider here. And so when we start here, I'll point out that it is, as usual, well above all the major moving averages. Also appears to have reached a peak and is now dropping in share price. If we go down to the RSI, you'll see that is borne out. It was overbought and is now falling out of the overbought zone. The stochastics both show the same, though they are still in the overbought zones. They are rapidly falling back towards zero or lower, at least. The volume chart shows a recent increase in volume, and now it is decreasing, and we're getting more red bars in there. And the MACD has peaked, although that was quite a long peak, if you can call that a peak, plateau perhaps, and is now falling back towards zero. Looks like it's about to make a bearish cross. One thing I'd like to point out on the chart here, though, is if you look, what we have here is a very nice regular uptrend. We have a higher high. Well, we'll start here. We have a high, then you have a low, then you have a higher high, then you have a higher low, and a higher high, another higher low, and another higher high, and another higher low, and now you just hit another higher high. So if it follows this same pattern, which we're hoping it does, it should bounce back down here somewhere to the $85 range or so, perhaps $88 range. And that would make for a nice swing if you were able to catch it on the way down, although it already fell here. We're just above $93 a share at the moment. But it does look like it has already begun to drop from its most recent high. And if we back this out to the 5-year chart, it becomes a little easier to see here. You have a high and then a low and then a higher high and higher low, higher high, higher low, higher low, all the way through. And overall, if you're looking at this over the last 5 years, this would have been a pretty good buy at many, many points along this chart here. So, I mean, the only time that wouldn't have been a great time to buy is at its absolute previous peak back in 2021. And even that is below where the share price currently is. It looks like it just touched $90 a share back here. So you'd still have finally naturally profited. But if you bought it pretty much any of these lows or what you may have thought were lows when it was dipping down, you certainly would be well positioned now. So keep that in mind. And as we try to do here, I will switch over and take a look at the company fundamentals. One thing I will point out here is this massive short interest in this company. 43% short interest. I mean, really, that is just absurd. So if this does start falling significantly again, there's clearly a significant opportunity for a short squeeze. So if we take a look at the financial strength here, you'll see it does have more debt than its peers. In fact, more debt than 92% of its peers. So that could be an explanation for this 43% short interest. But moving on, otherwise, we have a PE ratio, which is high. And again, this is part of the reason why I'm saying it may be a good time to go short on this. At least temporarily. Certainly don't want to get caught in a short squeeze if this high short interest begins to cover. The operating margin is average, and the return on equity is above average, beating out 63% of its peers. The growth rate is slightly above average, beating 61% of its peers in investment management. And the dividend is a solid 2.92%. This payout ratio, anyone that is familiar with these sorts of companies, you'll know that this payout ratio is due to massive accounting magic. So they are likely not paying out 240% of their income. This is a function of their accounting. So in any case, it looks like Ares is set for a short-term pullback based on it reaching a new all-time high. But please let me know what you think of Ares in the comments below. And if you got something out of the video, I'd appreciate it if you would hit the like button and subscribe to help out the channel. If you like me doing these short overviews of companies that might be good swing trades, please do all the things YouTube likes, like, comment, subscribe. And if there is a company that you would like to see me apply these metrics to, then leave that in the comments below and I will get to it as soon as I can. That's all for today. Thanks for watching and good luck with all your investments.